we've got one big news on Africa because the Africa Finance Corporation, the continent's leading infrastructure solutions provider, today reported its most impactful year-to-date 2023 earnings. The financials revealed expansion of projects and investment across energy, transportation, mining, food, textile, climate resilience across Africa in the past year. Digging deeper now into the latest numbers and the facts behind the figures is Samaila Zubairu, the president and CEO of the Africa Finance Corporation. A good evening to you, sir, and thanks for coming through on the show. Thank you very much, Mr.
Thanks for having me.
Yeah, thank you so much. It's the earnings season, so everyone is pouring in earnings. I'm sure you saw Wema Bank there earlier. But again, we're talking about Africa Finance Corporation with your big earnings. Talk to me about some of the landmark projects contributing to this very robust financial performance for last year.
Good. Thank you very much, Bosun. So at the Africa Finance Corporation, we've been focused over the last several years on Africa's structural transformation. And what do we mean by that? We're trying to work with African economies to have more value capture and more value retention within their economies. We're trying to see how we can stop exporting raw materials and move up the value chain for finished goods and in some cases, semi-finished goods. We're also looking at how to have better energy access for Africans, looking at a mix of both renewable energy and fossil fuel energy. We're looking at how to expand our industrialization drive, which is, again, through the value capture, value retention strategy that we have. So in the last year, we were able to expand our footprint across the transport and logistics sector, especially looking at supply chains, mining, food security, textiles, climate resilience, and energy. We commissioned the first wind farm in Djibouti, which is something that had been on the drawing board for some time, helps the country reduce imported energy from Ethiopia and its reliance on diesel-fired plants, utilizing their abundant wind resources. We've also embarked on an expansion of that program to see how they can develop an industrial park, an industrial zone that is focused on green fuels, for the maritime industry that passes through their country. We also were appointed lead developer on the Lobito Corridor, which is a very significant rail initiative. It's supposed to connect northwestern Zambia in a town called Chingola to Luakano in Angola. That would also continue with the main Lobito line to Lobito Port. The idea is to connect the Indian Ocean and Atlantic Ocean through rail. And that is a very, I would say, prolific zone for critical minerals or green minerals as they're called. And there's a lot of copper, cobalt, nickel in that corridor. And what we're trying to do is to diversify the supply chain for critical minerals through this initiative, have more value capture, more value retained, along the minerals. You know that Africa holds most of the minerals and metals that are required for the energy transition. Africa also has significant renewable energy sources from hydro, wind, and solar as well. And so the least carbon intensive path to energy transition is to process those minerals and metals in Africa, not export them to one side of the world, process them there using fossil fuel or significant carbon intensive energy sources, and then export them to the rest of the world. Our view is that looking at the strategic location of Africa, the significant youth population and growing workforce that we have on the continent, the abundant mineral sources and renewable energy sources, a lot of this processing should happen in Africa. That way we can create jobs for our people. If you look at Nigeria, for example, we're projected to grow almost double our population by 2050. What is interesting as well is that with the right decisions, we can also almost triple our GDP. In fact, by several factors, increase our GDP over the same period. Now, this will be based on what we do around industrialization. So one of the projects that we've also commenced this year is our industrial park in Remo in Ogun State. There we're trying to look at industrialization as a service. And we're looking at import substitution. We're looking at the value chains of starch, cashew, sesame, as well in that space. So essentially, import substitution is the name of the game in that space. So our special economic zone, which part of this has expanded, beyond Gabon now to operations in Benin Republic, where we're focused on the cotton value chain, the cashew value chain, the sesame and soya value chain. We actually have orders, for T-shirts from the children place in the US. So we're exporting garments now. We're not just exporting cotton. This is also something that can be created in Nigeria, and we have programs for that to happen as well. We're operational in Togo as well. There, we're also looking at the same value chains. We're operational in Chad, where we're focused on livestock and cotton. What is important is that we've actually started to export, beef from Chad now to Cameroon, to Gabon, and down to Angola as well. So we are already commenced, initiatives on the Continental Free Trade Area, looking at our own industrial footprint. So what we are also trying to do is to go beyond just the projects that are operational, but looking at how to expand this footprint as well. We have projects in ROC, in DRC, in Rwanda, and in Cote d'Ivoire, all of which we hope to continue to progress construction on. We are also looking at, more specifically, working with the Solid Mineral Development Fund in Nigeria. Last year, you remember we signed a program with them for using data to de-risk mining operations in Nigeria. And we've signed up with Excalibur. The initiative is going is progressing well, and we hope to have more definitive programs of about 3 to 5 projects that we'll look at and start to fund. We think that Nigeria is significantly blessed with a lot of the green minerals that are required for the energy transition. And we think that the success of our Thor Gold operation indicates that we can do industrial scale mining operations on the continent and in Nigeria in particular. So we're looking at all of those, and all of those came to light last year. We also have a mass transit system in Kinshasa as well, where we're working with TransConnection Gabon, to enhance mobility and reduce pollution. So all of this, resulted in, I would say, another year of robust, strong risk-adjusted returns for us at the AFC. Continuing our work in de-risking, developing to de-risk projects, introducing innovative financing instruments to finance our projects. We have our profits increased by 15.3% to about 329 million. Operating income increased by over 24% to about 497 million. Total assets grew by 17.3% to 12.3 billion, surpassing our initial target of growing to 10 billion from 4 billion over 5 years. So now we're at $12.3 billion. Our return on average equity continued to improve. So we're in a very good place. Capital adequacy ratio also increased significantly. So we're very happy with the results, and our shareholders are also pleased because we also declared $85 million in dividend to our shareholders.
I'm looking at the numbers, and then I look at the key numbers you talk about, the key metrics, or what you call the line items, as it were. And I'm just, you're talking about these projects, footprints across Africa, and I'm wondering how deep your pocket is. I mean, at the AFC, by the way, how deep your pocket is to be able to create this level of impact of projects across the continent and these finances. Talk to me a little bit about your capital raising and how you're able to get all of this to the extent that your overall assets was quite a very robust number that you just talked about.
Thank you very much for that. So AFC was founded with a very strong capital base. If you recall, we were established in 2007 with an initial capital of $1.1 billion. And we've grown that to now $12.3 billion in total assets. Our equity position is about $3.4 billion. We've been very profitable. We've balanced development impact with risk-adjusted returns. So we've managed prudently, and we've acquired an A3 investment grade rating, which gives us access to financial markets. And with that, we're able to access funds cheaper than most. And because of our unique architecture of a preferred creditor status in most of the countries in which are members of AFC, we have, I would say, a very good pipeline of assets that we can develop and create. So that gives us a pipeline that enables us to go back to the market to get funding. So if you recall, we just closed a $1.1 billion syndication, which was launched at $1 billion, but we got oversubscription of about 49%. So we brought it down to 1.16 to kind of maximize on the pricing. And we do have access. We are profitable ourselves, and we're well capitalized, and we have access to markets. We have issued several Euro bonds in the past. On an investor call earlier today, our investors were asking us when next we're coming to the market, and we told them that it's just a matter of timing. And once the right time is there, it would come. It is important for us to manage our cost of funds. Africa's big challenge is access to funds. And anytime we get that, it also comes at an expensive price. So what we try to do is to manage our access to ensure that we can continue to maintain, our cost of funding at a reasonable level that allows us to operate in the way that we've been able to operate over the years to deliver the return and the impact that we have. Because it's not just enough to have the money, but the money needs to come at the right cost. Otherwise, it won't be profitable operations, or you'll be looking at risky opportunities because the good opportunities can't take very high borrowing costs. So it's important to access funding at the right levels. So we've accessed $1.16 billion this year. We'll have a funding program of $2 billion, so there's more to do. Last year, we accessed several pockets of funding. We had a syndication of $600 million. We got funding of almost $400 million from China Exim. We also have recently announced, US Development Finance Corporation has announced an additional $250 million line for us. So we do have access. We're well capitalized, and we also are very prudent. We have 18 months of our capital required at any point in time. So we have a deep liquidity bench that supports our operation and our investment grade rating.
Interesting, we haven't really had time to chat since that deal with the Takoradi, your exit, the EFC's exit from the Takoradi port in Ghana. What's the significance of that spin-off transaction? Right? What did it really bring to the table for the EFC?
That's a very good question, and it's important that we discuss that because our business model really is one of developing to de-risk African opportunities and distributing that to global investors. So we work with the government and partners in Ghana to develop the Takoradi port. Once the port got completed, we're able to attract one of the larger global port operators called Port. Actually, they're one of the 10 largest global port operators out of Turkey. So they came, bought us out, and we're able to recycle our capital and invest in other opportunities. So, for example, the capital that we've taken out of that is available to do another port, in Nigeria, in any other part of Africa. So the ability to recycle capital is very, very important. And one of the big challenges in Africa is that people don't find exits. But we have been able to manage to always get exits for our operations. If you recall, we exited our position from Main One in the previous year, also demonstrating our capacity to develop to de-risk opportunities and find exits. So it is significant to be able to exit our investment opportunities in Africa and to have the capital to recycle, into other new projects because you have to keep the cycle going.
So you also expanded your member states of shareholders last year. And I'm sure this is one interesting point for me because for the first time, you're bringing in a non-African shareholder and that's the Exim Bank of Turkey. How does that expansion shape AFC's mission as your organization, as an African-focused organization? Now you're stepping out of the continent to get shareholders with the wider world. How much further membership are you looking for in Asia, Pacific region, from Latin America, wherever the money exists in the world?
That's a good question. So we are a public-private partnership by design, and the focus is on all of Africa, and the focus is on how to mobilize capital within Africa and from the rest of the world. So typically what happens is that you have to start with your domestic capital to develop, to de-risk the opportunity, to demonstrate that it is viable. And once you have demonstrated a viable proposition, then capital from around the world will want to work with you. So we have always positioned ourselves as the resilient, reliable bridge to a prosperous African future. So people that have Africa as part of their strategy are keen to work with us, to be partners with us, because we can bring a lot to the table. We'll have almost 170 million professionals that are focused on Africa with the right skill and experience to develop and de-risk opportunities in Africa. So that is an attractive proposition for anybody that wants to do business in Africa. So Africa is clearly on the map now. A lot of people now understand the growth potential of Africa. People understand the demographic opportunity in Africa. People understand the significant, I would say, energy transition opportunity that is in Africa, and the industrialization opportunity in Africa, and people want to buy into it. So people, by partnering with us, are taking a stake in the African opportunity. And there are several other parties that are interested. We have ongoing conversations with several parties. You know, it's all confidential, so we can't talk about the people that we're talking to, but we are talking to quite a number of partners. So we would remain an African institution because the focus is on Africa, but African capital, you know, is not enough to address the African opportunity. So we're open, and we are open, and we welcome partners that want to do business in Africa to come and invest in us, invest alongside us to do business in Africa.
Very, very interesting. A whole lot facts behind the figures there. Thank you so much. And of course, we wish you all the best and your team at Africa Finance Corporation. Thank you very much, the President and CEO at the Africa Finance Corporation, Samaya Zubair.
Thank you for having us.
Thank you so much. We appreciate this, and we look forward to another chat, perhaps when you got a first quarter and other numbers in.